hello, good evening, friends. Welcome everyone to Super 25, India's largest retail traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure and honor to invite every one of you to Super 25 3.0 edition. Before we kick off the program, I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. I would also like to thank and appreciate our title sponsor Espresso, the 𝐒𝐈𝐴 company, one of the leading stock brokers in India with millions of investors as their customers. The speaker for today is Mr. N.S. Fidai. He is a founder of Analyze India. He recently co-founded a company called QuadRR.com. He envisioned technical analysis as a medium to empower traders. He has an illustrious track record of 25 plus years in the Indian equity market. He started way back in 1991. I think, sir, is it much before Harshad Mehta scam? Right?
Yeah,
92.
1990, 91, yeah.
Yeah.
Just
so in the last, amazing. In the last 6 years, he is mainly focusing on the honing of skills in technical analysis, and he has emerged a successful technical analyst par excellence. He is going to empower us today with his special topic, Decoding the Sensex. Fidai sir, on behalf of Traders Gurukul, Money Control Pro, Espresso, the 𝐒𝐈𝐴 company, I extend my warm welcome to you into this program as a speaker. Thank you very much for being with us, sir. Go ahead. The stage is yours.
Thank you so much, Ashok, for your warm welcome and fantastic introduction. Just wanted to say that means I am into this market since 1990-91, and today's topic is very interesting topic actually, because everybody looks at Nifty and most of us ignore the Sensex, right? So this is where we are going to see how Sensex actually has a larger history. I always say that when you want to know somebody, you need to know them for a long duration, right? So we know Sensex since it's there for a long duration. So it gives more ideas about what future holds for us, right? Because past is what speaks for us, and we decode the past to understand what the future will tell us. Okay. So yes, thank you so much for our title sponsor Espresso, a 𝐒𝐈𝐴 company, right, for having us here. Well, I would like to give a little introduction of myself. I have been training people since last 17 years. I have been in markets for 32 years right now. It's been a very long journey. I have started from times when there was no social media. So right now I see many of my mentees doing much better than me because they're more adept at social media and using all those things. But people know me because of one of the pioneering work that I have done is of convergence of moving averages system. I think we did that in one of the earlier versions of your Super 25. I usually use moving averages, and today also we'll try to use a little of moving averages, right, in all my analysis. Well, I do this mentoring program, which encompasses everything, whatever you need as a trader, as a investor, long-term investor, or swing trader. You need to learn lots of tricks, and I teach everything, so it caters to all traders and all types of traders and investors. Most importantly, right now I'm doing something very exciting right now. That's called, we are going soon to launch Coder.com. Coder, Q-O-D-R-R, is quants on demand. Like, people right now are trying to create algo trading, systems, and they don't know how to use it. They don't know the software. So this is something where we are coming into the market with no coding knowledge required. You just have to have little bit of knowledge of whatever tools you want to use, technical tools, or even if you don't, there will be ready-made strategies for people to use, right? So that's a little bit about me. Other than that, I think lots of people know about me. I have been covered by Money Control Pro earlier, right? They have made a beautiful write-up on me, so people can read there, right? And there are other places where I have already spoken, so I don't think we'll need to use this time for those kind of, talking about myself, rather than let's jump into the topic, right? This is something that I usually say: no capital market. So basically it's like a hashtag that I use on my Twitter handle. My Twitter handle is @nsvidai. So, without a gap here, right? That's about this thing. But I hope people relate to this term very much, because you understand you need to survive. You need to make sure that your capital survives with you if you want to survive in market and actually thrive in market, right? Not just survive, because it's not about surviving. So if you survive the difficult times, you will survive the you'll thrive in the best times. So that is the whole purpose of this today's presentation also. So what we are going to see is what the past tells us, right? And what has happened in the past. We'll try to put them in numbers. Then we'll try to make a sense of what the chart says to us, how it looks, and then we'll see when should you invest, what is the simplest way, what is the best time to put your money all at one go if possible, or you can say you can go lump sum in the market at that point, right? And you need to know when to exit. So if you exit at a good time, possibly you will save millions of your money, and you will save the hard burn. Right now people are seeing a little downside in the market, and people are, I call it as I see this whole thing, whenever this happens in the market, you will see the noise on the WhatsApp group, Twitter group, and everywhere it goes silent. So I call it as Twitter noise index, basically, because that goes to almost negligible levels. The noise goes to almost zero when the markets are down. So because people are afraid, people are nursing their wounds, and suffering a hard burn, so they don't want to talk about what is happening. So if you knew what to do, when to do, how to do, you would be in a better position, right? So this is where we will learn how we can use technicals, how you can use long-term charts, okay, and seriously, stay safe and survive the markets for a very, very long term, and have a very fantastic journey in the stock market, right? So let's start. Now some past fun facts for you. What Sensex was launched somewhere in April 1979. Okay, a saga that's become a part of every trader and investor's life, and will remain so for decades and centuries. I hope so. And most of the, like you see, Dow Jones is more than 100-year-old index, so why not? We can also safely assume all our indices, Nifty plus Sensex plus other indices, some few may come up more, they will all thrive and survive also, right? Because they don't die. People, these are all perennial kind of things. They remain, okay. If you know, Sensex started, the base of Sensex was 100. Right now it is around 55,000 K, right? 55,000. It had hit 62,245 in October. Just imagine how many times. 622x almost, right? So that's huge kind of, and right now it is at 550x in just 43 years. That's crazy returns, right? Unbelievable returns. So if you would have invested simply in Sensex as an index, you would be sitting on a pile of cash, mountain of cash rather. So if you see, I'll show you on the charts also. In first 15 years, it rallied 46 times. From 100, it went up to 4600. Okay, and that is from 79 to 94. That is even post Harshad Mehta. It made a new high just 2 years after Harshad Mehta's peak, right? And it had a negative performance in yearly chart only in the year of 86, 87. 86 was negligible down, and 87 was a bit, lower. Let's see what else we have, right? So first major correction of 86, 87 saw it drop from 659 to 390. That is a 41% fall. Now numbers look very small, but seriously, it's like, you had 659 rupees, they became 390. You feel very sad about. Matlab, you don't feel so sad about it, but just think about it as you had 65.90 crore rupees, and that became 39 crores. You will feel seriously bad about it, right? So that's why I have put the number in percentages, so we get the impact of it, right? Usually, I would say many retail investors don't look at prices, they look at, they look at prices rather, they don't look at percentages. So they buy small stocks thinking that what they can lose is only 10 rupees, right? If you buy Vodafone or you buy some other stock, Suzlon maybe 10, 12 rupees, you can lose only maximum 12 rupees. But you have to understand, it is not 12 rupees that you lose, it is 100% of your invested capital that you lose. So it's very important to understand, if you are an investor or trader in market, you should always look at everything from the percentage perspective. It gives you a better perspective, better idea. So let's go to first big crash. First, I will show you the exact, this thing, how the legs, what do I call first leg and second leg. So all of us remember mostly 2008, 2020, right? But there have been many major corrections. Like if I illustrate them, you will see there are almost 12 corrections that have happened on Sensex since 1979, which were major. Other than that, we had multiple, like current fall, I wouldn't even call major. Right now, what we are witnessing in the market or experiencing in the market is not still a major correction. So just imagine what I'm going to show is going to be an eye opener for you. Now see this already we spoke about, right? Just now, 86, 87, 659 to 390, 270 points, almost 41%. Then again in 1991, 1602 to 947, 655 points, again almost 41%. Then you had Harshad Mehta, the peak, Harshad Mehta peak 4546 to 1980. Now this was one first major correction which went beyond 50%, right? So it crashed 2,566 points, and you must have seen the movie also. You must have realized the whole impact. Though I was there to witness it, so I can tell you it was bad. But because of social media, you make it look badder nowadays. Earlier we did not have that kind of hard punch, right? So happy for myself, but now unhappy for the way it is playing out right now. One thing we have to understand is corrections are part of the life and part of the market. The larger corrections come because there have been some larger issues. So when larger issues subside, the market goes back and reverses. So let me show you the negative part about the crashes, and then we'll see how the whole thing reverses, right? So that we'll see later on. Then we had 94, 96, there was a bounce back. Can you see that? From 4546, that was Harshad Mehta peak. In 94, it peaked at 4643. Just within 2 years. Just wanted to show you, how the markets bounce back. From every fall, if you see 390 to 1600 is a big jump, right? It's 4x. From 940 to 4546, it's 4x. From 1980 to 4643, it's almost 2x. Okay, and see this was 40% around again. Now, can you see some eerie things happening here? 41, 41, 39. I'll show one more, right? 97, 98, 4,605 to 2,741. Now see this again, next 2 years, from 2008-20, again back to peak. Okay, and then fall of 1864 point, again 40%. So really almost every time in this first leg, when the markets fell, they fell how much? They fell exactly 40% approximately. Okay, something unusual, right? Something unbelievable. And one major fall took 56%. Okay, now the other major falls, just see the size, just see the impact. This was Ketan Parekh, tech boom, right? Boom to bust, rather, I would say. So from 2001 to 2000 to 2001, the peak was 6,150. The bottom was 2,595. And look at this, it was 3,555. The magnitude of fall keeps on rising, and it was almost like 50 and 58%. Okay, so I think you must be getting some clarity, right? By now, by looking at this first leg of the crashes, just imagine for every fall, there is a bounce back. And 2 years, 1 year rather, here 1 year, here again 1 year, here 3 years. But if you see, it's so simple, it's so easy to visualize when you put numbers on paper and try to see them, right? So this is what we wanted to show you. I wanted to show you the decoding of the Sensex. Now look at this. This is the first leg of Sensex from 79 to 2000, almost 20 years, 21 years, right? And this is where the journey started on the extreme left. That is April 1979. And here it was a little sideways, almost for 2 years, 3 years, kind of sideways movement. Market did not crash much. It was a nominal fall. But first major fall, as I had said to you, 86, 87. So now it is depicted in the chart. Then 1991, then 92, 93, then 94, 96, right? And then you had 96, 97, and then finally 2000, 2001. So I hope you are able to see this, and I hope you are. Now, this wouldn't have given you much idea, just showing you a chart. So that's why I put it everything on the record, the previous slide, right? So you could, literally experience the whole thing and understand how the whole thing played out. Now, on this chart, it looks so simple. Why does it look so simple? So less candles. It looks like few days kind of fall. This is not few days. These are few quarters. Guys, I'm using a long-term chart, quarterly chart. Okay. And this was a semi-log chart for your information. Now we go to the next leg from 2000 onwards, right? So 2000 to 20 years. So earlier first leg was first 20 years. The next leg is next 20 years approximately, you can say. So we have divided the current time frame into two phases, 2 decades kind of thing. Now this is 2004. Okay. From 6,249 to 4227, 2000 points, 32.35. Now this is called as Dhoti Sari episode. Mr. Vajpayee, Prime Minister, lost his term, and Congress came in power with the Khichdi Sarkar, and that's how this episode is remembered, right? 2006, 12,671 to 8,800, 3,872 points, 31% approximately. Now just realize 3x run almost from 2004 in 3 years, from bottom to top, 3 years, 2 years rather, and almost 3x. I want you to concentrate on the bottoms as well as tops, from the previous bottom to the next top, right? And remember the years. That will give you some kind of solace if you are looking at this market and nursing your wounds. Don't worry, you will come out. You just need to stay. Okay, now this was the mother of all crashes, 2008, which we all remember, right? Most of us. So this was from 21,200 to 7,700, 13,500 points. Okay, and that was 63.7%. Like people take Fibonacci numbers and all that. So market doesn't go by Fibonacci, it works on its own. So here, if you see, no Fibonacci numbers were made at the bottom, rather it was something silly numbers. Earlier it was 41 and this is 32, right? Okay, so 32 is very near to Fibonacci, but doesn't make exactly. Now 63.7 is also 61.8 near abouts, but it goes beyond, and that few percentages actually are the most damaging percentages. Now this was called global financial crisis. I hope you all know, layman and all. So this is still date in the stock market. From my living history, from what I know, I have seen this as one of the major crashes, right? Now here also, if you concentrate from bottom, from 8 to 9, right? The crash number 8 to 9, from 8,800 to 21,200, that is almost like 2.5 times. And just 2 years. Again, look at this from 8 to 10, from bottom to top, from 7,700 to 21,000, which is almost like meeting the previous top, right? And that is almost like 3x, approximately 2.5 times. This fall also almost like 28.30%. It consumes 6,000 points. This is year 10 and 11, 2010, 11. Then 15, 16. Now you see the rally was almost 100% from 15,000 to 30,000, right? This is near history living. All of you must be knowing, or few people must have already experienced these things. This fall was 7,530 points, 25%. When you had 2020, which was Corona, right? COVID related fall, black swan event, 4,000 to 42,274 to 25,639. It took 16,635 points or shaved off the top, right? Almost fell 40%. Now, if you see some congruence again, look at this 30, 30, approximately 28, 25. Now, the fall here, 63.7 was supposed to be huge, and we felt Corona was much bigger, but seriously, Corona was much smaller compared to. It was a black swan event. Now, let me tell you something very important. First, let's see this, and then we'll try to understand. Again, this is a quarterly chart, so don't assume this to be very small kind of thing. Now, this is one single candle. If you see, it happened in one quarter itself. Same happened here, 2020, 2020, right? One single. Here it was two candles only. Here four quarters. So basically 4-5 quarters. If you see, all fall mostly 4 quarters, 4 quarters, 4 to 5 quarters. Earlier also, if I take you back, let me show you how many quarters it consumed. So see this chart. This used to consume large amount of means quarters, almost 2 years. Here it was just 2 years, 2 quarters. Again 4-5 quarters. Again 6 quarters. Again maybe 6 quarters, maybe 8 quarters. So basically, if you see, the fall don't last for long, right? Fall lasts for very nominal period, while the recovery and what we feel, the loss is huge, because we don't like pain. We don't like to see things going wrong or against us, and that's why the painful period looks longer. Seriously, it just means that you need to survive for some period. You need to hold good, don't do anything if you have not done anything, right? What I'm saying by this is, like, if you haven't sold at the peak or somewhere where you need to exit, at least don't sell. So I say, today also I've tweeted, when you see blood on street, buy, but if it's your blood, don't sell. So very important here that if it's your blood, if this black candles is where your blood has spilled on any of this fall, don't sell. Okay, very important. Or you should have sold on the top or somewhere where you feel there is a point where, which we'll learn, right? Which I'll try to show you also, where you could have exited, right? So if you use technically, you would be happy, right? You would be out and you could buy on dips. Usually at top, when these peaks happen, okay, so the fall actually accentuates in the later stage. Your portfolios get hit very badly in the last leg of the fall. So if you see within the fall, there would be some spikes on the top and all that, right? So basically, there is good volatility. You would get enough opportunity. There will be stocks which will be making 52-week highs, like we saw few days back also, right? In our markets, many stocks were making 52-week highs, while we already knew that there is something wrong happening in the market. It's not great kind of market at the moment, right? But we like to disregard falls, or we like to disregard what is going to happen. If somebody tells us something negative, we usually don't like those people. But in market, I would say you should look at people who talk, maybe not necessarily every time, but the people who talk with sense, like with some logic, or you learn that logic, I would say. So either understand the logic and then do it, or learn from somebody, or see who is talking logic and listen to them. You will be more happier, right? You will protect your capital in a bigger and better way. So let's put it in a summarized form. So this is all we saw. We know this. We all know this. So these were the major corrections. If you look at major corrections earlier, they were almost like 60, 55 to, so anything beyond 50. So we can safely say there are two types of corrections in market. One is major correction, which consumes more than 50% of the capital, right? It breaks down from the peak 50% and beyond. Then there would be second, which is like you can say 30 to 40% kind of correction, right? But in last few second leg, if you see from second leg, it doesn't go to 30 to 40. It goes from maybe 25 to 30. So currently, we don't have that appetite which earlier market people had to digest 40% kind of fall. Currently, we have very low appetite, and that's why you can say safely between 25 to 35%. Whenever you see a correction in market, that is the completion of the fall, right? So you can start putting your capital whenever you see 25% fall from the peak. So very small, simple back of hand calculations. Okay, now one more thing that I had said to you, and I had stopped, I had paused, I said I'll let you know later. If you know how the market functions, and if you understand how the market people function, the participants function, every fall is an orchestrated fall. Don't think of this as a very tall statement. This is the truth. Okay, so every time the whole market is like an orchestra. It plays and then goes to a crescendo. From that crescendo, you are made to believe that this is the best time of the world. And when the best time of the world is actually there, when you're listening to the crescendo, the voice is at the high, everybody's happy, everybody's dancing, everybody's casual, careless, right? And that's when post that the corrections happen, because post crescendo the orchestra will stop, and that's what happens most of the time. Okay, so most of the falls, if you see here now, consumed around 8, 5, 7, 6, 7, 4, 5 quarters, right? Earlier it was very long. It took longer time in the first leg, almost 8, 2, 5, 7, 6, 7. So if you safely take a average of this first 6 falls, it would come somewhere in range of 6, right? The second leg, if you see, the fall have consumed lesser duration, lesser number of quarters. Okay, now this is the fall from the peak to the bottom. We are not talking about the recovery time, we are talking about the fall, right? The number of quarters consumed to go to that low of the bottom of the fall, right? So if you see 7, 8, 9, 10, 11, so maximum is 5 quarters and minimum is 1 quarter. Now this 1 quarter, especially the 12th one, Corona, which I call it as a black swan event. Now this was never planned. This was not an orchestrated fall. This was more of like, impulse kind of fall. This is where even the smart money or the larger market participants who usually orchestrate the whole events of the market, they were also trapped. And when they are trapped, you would see what happens. Like the next slide will tell you much better way. Now look at this. Now recovery time, 3 quarters, 6 quarters, 7, 6, 10. Now here again the recovery time was a little higher side. Look at this now. The recovery time is 229964. Now if you look at this Corona related one, it just took 1 year to reverse back and go beyond the previous high. No, we are considering not just means from the bottom. We are here, what we are considering in the recovery is the price should cross the peak of the previous high, right? The lifetime high. So this has happened, and this is happening in a very, very simpler, easier way to understand. You can easily extrapolate this on your. So when you see 25 to 30% correction, jump into the market. Go and buy whatever you wish to. Maybe if you don't understand anything, buy mutual funds. If not, if you want to do your own investing, maybe buy the top quality index stocks, right? Which you believe has huge potential, has fallen to good values, right? So you would get them. So anything beyond 25 to 30 is very, very. Now here one more thing that we need to, again I will come to that, which I will take as a next this thing, my talk in this topic itself, but very important to understand what happens and how it happens, right? So, and then the recovery. So if you had bought, just sit tight. How many years? Maybe 1 year, maybe 2 years, 2 years and one quarter, and you would see your money multiply from, let's say your 100 rupees had gone to 75 rupees, the 75 will become 100. So you would get fantastic 33% returns. Okay, on index. That doesn't mean the stocks will give you 35% returns. The stocks will give you something like 3x of that returns, because index is a mix of 50 stocks or 30 stocks, Sensex or Nifty, but your stock actually has a higher beta, so it moves faster than the whole index, right? So it will give you much higher returns. So you can safely assume 2.5 to 3 times will be the returns on your capital. So if I'm saying 33% on index, you would get something like 100% return in just 2 years maximum time, 2 years, maybe one quarter. The fastest would be 2 quarters, right? So that is being greedy, but fine, it is there. There have been cases, so we can safely assume that. Okay, so I hope I'm making sense to you. I'm trying to give you some kind of specifics to do. So when you, now I'm still repeating that again for people who would like to note down or understand. Whenever you see 25 to 30% correction, start investing when you see 25% correction. Okay, and keep on investing in weekly basis. Instead of doing monthly SIP, do weekly SIP at that point. Okay, and then sit tight on your investments for whenever you see the peak, and after peak also the market, you have seen how from the bottom the next top is almost like double, 4x, 3x, double. See this, now it is doubling up. Earlier it was doing almost 4x, then 3x, then maybe 2.5x. Now it is doubling, but because the numbers are becoming bigger, right? So that makes one sense for us. One more thing, if you have noticed on this chart, do you see this yellow tags that are put, yellow markings, right? I highlighted those points. These are the highest kind of falls, major kind of falls, right? Overall. Now, if you look at this, it's 3, then it's 6, then it's 9, then it's 12, right? So again, some congruence here, some kind of geometric representation. You can see the series forming here, right? Now, very important, after a major fall, you will not see a major fall. This is what I wanted to highlight when I said I will show you something very important. Post, I was talking to you about the recovery part, right? So if you see one major fall, whenever it has happened, if the major fall has been something like 60% or 50% or anything beyond 40%, possibility is that next fall will be 25 to 30%, will be lesser. And between major falls, between two major falls, there will be two smaller falls. Okay, so any fall that you see which are less than 25%, maybe they are around 15%, 18% in market most of the time. So I have not counted them as major falls, but here for our study purposes, you would every 2 years, 3 years will get an opportunity to invest in market. Okay, so you can start investing when there is trough in the market, when the markets have fallen. Most of the time people don't have money when the markets are down. So what I would suggest is have a surplus fund in some other assets other than equity. Most of us have, people keep it in FDs, gold. You can switch from gold FD to the market at that point. If you have not sold your earlier equity, you wouldn't have cash, right? So you would be having your gold and fixed deposits. Invest that. This will give you like crazy returns. Let's say even if it's said that when you are so bullish, when the markets are down, you should be selling your property and buying your home and buy the markets. Just imagine if you would have sold your flat and bought the market at this dips, right, around this dips, not necessarily exactly at the dip, because nobody, I would say, would be able to exactly predict the exact point, but we can safely assume around 30-40% is major corrections on an average. But like as I said to you, between two major falls, right? There is two smaller falls. So those falls are around 25%. Just imagine you would be doubling your capital in next 2 years. So you could buy two properties from the same investment that maybe even more, but I'm saying at least two, because that would be doubling of your money in very short duration. Okay. So this is what we need to do as actionable, right? Now, if you see one more thing, 92, 93, then 2008 years, then 2008, 8 years, then there was no major fall between 2008 to 2020, right? It took almost 12 years. So seriously, the current market is has been blessed by Corona for having a smaller fall for and a faster one. The recovery was faster, the fall was in a shorter time. It took just 1 quarter to fall and then reverse. See, if you see the previous slide, you would see when on the chart. So it was just 1 quarter. The fall took only 1 quarter and took recovery time of 3 quarters, right? So basically, this is what I would suggest, people can do. Okay, now there is technical. As I said, I will put some moving averages into the system, so you can, if you are into markets and if you like technicals, if you use technicals, this is a very simple tool. I have this quarterly chart only in front of you. Okay, and that quarterly chart is telling you that since 79 to 2022, right? It's been a long journey, almost 42 years, 43 years. And within this journey, if you see, the moving averages came into play whenever the the event, those period elapsed. So basically, we are talking about 18 quarters and 50 quarters here. Now look at the beautiful part of this chart. Markets rarely go below 18, and if they go below 18, they take a support on 50. Beautiful? Is it simple? Look at this, even your Corona fall came to 50 quarterly exponential moving average. 2008 came to exactly 50 quarterly exponential, a little below, but that is on a quarter, it did not close below that. Here, even this one, this fell below, but it did not break the previous major bottoms. It was almost in this range. So there was a false move here, no doubt. It closed below only once in, and then you can say here, but that is not a bottom. So if you see the bottom has never breached 50 QMA except one exception. And I believe there should be an exception in life, right? So we don't become, too complacent, and we don't feel like Punich Bhagwan hai, right? So we don't feel like that. So that's the reason there should be some exceptions, right? Because otherwise we will become very perfect. So I hope this also helps you, other than what I showed you, a small simple calculation, 25% when to buy, right? When markets are down 25%, you start investing. But on charts, you can see it is so easily depicted. So even this fall, which I was showing you, so between 2008 and 2020, there were two falls. This was the one fall we saw, and the other one was this one, right? Now they look minuscule, they don't look much, right? And where did they take support? Exactly on 18 quarterly exponential moving average. I'm trying to expand this QEMA to give you a proper definition of it. 18 quarters exponential moving average. Same thing happens every time. Here also it took 18, and you would see this was the fall that we had seen. It went up to 18. So every time if it falls, it will come to 18. So second leg has been very, means you can easily just look at the chart and say, okay, this will happen, right? Or this things should happen in this way. So you can safely assume that if there is a major fall in the market, we can simply say the market would come to 18 QAMA in this case, right? Currently where on Sensex. So we'll try to see it on chart also. We'll try to see exactly what is 18 QAMA, okay, and try to understand whether it will come to that. Is it 25-30% approximately from the peak? So you can do that. Now, what about exit? So basically we need to do a little jugglery here. Here I have done a little jugglery. These candles are based on 40 days. Okay, these are not any quarter or month or something. This is a little beyond. So this is 2 monthly kind of candle. 40 days is approximately 2 months in the market, right? So this is 2 monthly candle. And if you see this EMA, I have used this 8. Okay, so whenever there is a crash in the market, it now in the current context it is very much visible. In larger context it is very much visible. In smaller context it doesn't come much into play, but rather it acted as a support. But here if you see this first fall, right, the price went below 8 EMA, right, of 40 days candle. That is 2 monthly candle or bi-monthly candle. And look at this, the price fell substantially from there. Same thing happened here. And as I told you, the larger corrections will happen in the last leg. You will see more pain in the last leg. When you feel like, the world has come to end, they will still hit you more. Okay, so look at this here also. This whole correction lasted for almost 8 quarters, almost after that. Here also the major 2008, it was captured. Even the smaller one, 2010-11, right, was captured. Then 13, 14, 15 was captured here. Then your Corona thing was captured beautifully, right? So right now we are just hanging by the neck here, or a thin thread, rather, I would say, right now at the current levels, right? So if this breaks, if it goes below, we need to exit, as simple as that. So this is the, means 40 days, we make a candle, use a custom chart, okay? Based on that, we put 8 EMA on that, and you see how beautiful, if it, either it will hold as a long-term, see this long-term beautiful support here also, it kept on holding it. So till it holds, it is fine. Moment it breaks, the hell will break loose on the market, right? So that's what happens. And here I was sorry, I was saying some 8 to 10 quarters. These are not 8 to 10 quarters. These are 2 monthly, right? So if they are 10, rather you can say safely 3 quarters approximately. Now, as I said, in today's tweet also, that if you are, in the market, if you don't do anything, if you buy the index and sleep at whatever point, and just sleep and think you may live long enough, or that money is for your family, right? That future generations. Look at this line that I've drawn. This is a line that I started in 7980. I have put the next stop, this thing, handle of this trend line at this point. And only in 2020, that is the Corona time, this trend line was challenged. Otherwise, this trend line has never been challenged, and this is your Sensex since 1979. So India is forever in a bull market. There is no denying the fact that India is the market to look for forever, till we don't break below this line and start closing below this line. And when that happens, probably you will not worry about the world or the market or the money. You would be rather worrying about your survival, right? So I would say we are in a perennial bull market with this chart. So this is what I would say. You can never be wrong if you are long, right? But if you take the, the way I have explained to you, the things that you need to see on the charts and all that, right? So if you use that, you will be, living a very healthy, wealthy, and fantastic life with lesser worry. So you know when to exit, you know when to enter. Now let's try to see on the chart how whether means where is the next 18 QEMA, right? Because that's what you would like to know. So this is your 18 QEMA. It is at 13,530. So I'm on Nifty, that is right. So Nifty, it is around 13,500 approximately. This line, please understand, this will keep on rising till we consume more time here. Till the prices are above, this will keep on rising, because this is a dynamic line. Moving averages are dynamic, so they will keep on rising. Right now, if you see, we have hit 4 quarterly EMA, we are closing below, right? On a monthly chart rather. This quarter is yet to close. It will be in June, so there is a long time for that. But once we have breached it, it's not a good sign when you breach a this 4 QEMA. It's first sign of danger in the market, because whenever on the chart I have seen, whenever, like, look at this here also, it breached, there was a fall. It breached, next month it closed, and then there was a fall. Here it breached and closed. In second case, it breached, did not close. Second quarter it breached and closed, and then it fell. Now look at this again, it breached and then fell, right? Then closed below. So breaching is the first sign, first attempt by the smart money or the larger participants who know much of economics and other aspects of the world economy. They understand it from a different perspective. We technical analysts don't go into too much of details of that side, but we can safely say we can understand what they are going to do, right? So whenever you see this safe line, 4 quarterly exponential moving average, that is almost like 200 DEMA, right? 4 quarters is nothing but 200 DEMA, but much more precise. So whenever index closes below that, it is the first sign of issue, right? And then you can have major corrections. So here, as I've told you, 13,500. Now I put two lines, trend lines. Being a technical analyst, I can't avoid putting trend lines. So I put some two trend lines, major trend lines, top, major top, and major top. It's coming at around 14,500 odd or 14,200 odd, depends on how far it goes. So more, see, this is again a dynamic line, so it will keep on rising. So 14,200, 500 approximately. So between 14,500 to 13,500, you can start deploying your money. That's what, if this fall happens, right? And have some money in your hand, maybe if possible, means if you feel your portfolio is down right now 20-30% from the peak, right? It's not in a losses. You have seen maybe some 1 lakh rupees as your amount, let's say, and it has gone to 80,000 right now as a profit. So you don't want to see it go to zero or minus, right? That profit you don't want to go to zero. So maybe book some profits wherever you are not uncomfortable, the way the value is not so great or the stocks are not so great shape. So get out of it, generate some cash whenever there is a bounce, right? And keep it aside, because one thing is sure, every 2-3 years you will get a fall. So be ready with your cash, right? And make sure that you take advantage when that happens. Now this is Nifty chart. What we saw was Sensex chart. Okay, so I'll open the Sensex chart for you and try to give you the exact numbers, and we'll try to see the 40 days candle, right? How to form that and all. So, and then put 8 EMA on that. So what you do is you make a customized listing, 40 days, apply. Okay, we don't need volumes here, so close, delete. We don't need all this, so we'll remove all this. Okay, now we have 40 days candle chart, right? Let's see if it is proper. Yeah. Now look at this moving average value as of yesterday. This is not as of today, right? So today we have closed a little below, but what is the value? It is around 53,722.75. I don't know what is the current value because I have not checked Sensex. Let me see for you. Maybe get back to you. What is the Sensex close today, right? So you will get a fair idea. Moving average was at 53,722. Sensex closed at 54,835. So we are still above that, right? We are still above this moving average. So if it starts closing below, okay, 53,000, just remember this number 53,000 probably, or 53,500, or maybe this low of 51,800. So just safely assume if you see Sensex at 52,000, you seriously need to worry, because your portfolio profits, whatever you are say have seen, will deplete like crazy after that. Okay, so just wanted to give you a kind of numbers so you could easily understand and maybe take advantage of, means being in this presentation, you should be able to take advantage of it when it happens, right? So no need to panic at the moment till we don't break, because earlier also, if you see, the markets did challenge this line but hasn't broken. So till they don't break, you don't have to worry. If they break, then you start worrying. So something similar happened here. If you see this in this what was this period, 2010, market sustained within this period, right? It kept on holding this moving average. Moment it gave a breakdown, look at this, from 19,000, that was the peak, right? Let's see the value of the moving average at that point. What was the value? 18,040. It closed at 15,000. Sorry, made a low of 15,765. Closed at 16. Just imagine 18,000 to 16,700 within just next few days, right? 40 days. And see the bottom. You wouldn't want to see your portfolio, capsize like this, from 18,000 odd to 15,500. That is 2,500 points on Sensex. Works out to almost 800 points on Nifty. I just do a simple mathematical formula, divided by 3 for Sensex. If I have to check from Nifty to Sensex, multiply by 3. If I have to check from Sensex to Nifty, divide by 3. Now see this also here, when it closed, at this point it was at 16,000, went down to 7,700. So the fall could be brutal. It can take away your hard-earned money, or maybe, whatever luck-wise also you would have made money, but it will take away. Here you would say, like, this was not a major fall. So let's see what happened in this case when it broke, right? 26,600 was the value of the moving average, and the dip was 22,000. That is 4,000 points, guys. 4,000 points works out to 1,300 points on Nifty. So will you be able to afford this kind of fall in 120 days? That is 3 quarters. It looks good, but when it breaks, the hell will break loose. Okay. So please understand, please, make sure that you don't take any chances with the market when the corrections happen. See, as I said, being, you will never be wrong if you are long, but then you need, you need to go through the pain. So it's all good if you are comfortable with the pain, but if you're not comfortable with the pain, and if you want to generate extra alpha on your capital, then you need to do it right away. Okay, so till the market sustain above this line, there is no issue. Moment it sustains below, starts closing below, or it goes below, that is where the major challenge happens. So I have given you a small indication, 51,800. So safely assume if you see 51,500 on index, right now we are at 54,000 odd. So we are still far away, but when that happens, you don't want to be there, right? You don't want to see that kind of situation. So I actually, can say safely, what you need to do is, you need to check the charts, or remember the numbers, or understand the 25-30%. Okay, and then take a call. But exit is something where people lack most of the time, right? I believe most of us don't know when to exit. All of us know when to enter. Entering in market is so simple. You can just buy at any point, and you can maybe have a kid who you can say, buy, you can purchase on my behalf, and he'll be able to do it. But it is the exit where you need to be a little smart enough. Okay, so right now if you see your stocks are down 10-20%, those can go down to 30-40%. Now, one more thing that I wanted to show you, like how brutal the falls can be, right? Before we do that, see this 2000 period. Okay, this is your 𝐾𝐜𝐜𝐷 peak. So actually, index fell how much? Because I want to show you the reality and the facts that happen in the market. Index was at 6,150 at tech boom peak. Sensex, that there was no Nifty at that point, right? So Sensex was at that point at 2000 odd, into year 2000 at 6,150 and fell all the way to 2,600. We already know the amount of percentage of fall. It was almost like 50%, right? But do you know something unusual about this kind of fall? What happens to the stocks which are flavor of the market? So do you know how many stocks are currently surviving that kind of fall, that brutal fall? You can count on your fingers. Okay, so those kind of things happen. I'll show you which are the stocks probably which you all know, right? We all know, but problem is we don't give too much of relevance to technicals many times because we believe fundamentals are good. Now nobody knew how the Wipro was at that point or how the Infosys was, right? It was just the beginning of their life. Infi was at that point, just maybe just started in the market. Let's go to year 2000 and try to understand what happened, right? This is 2000. I'll try to zoom this up for you. Okay. Now see this. It rallied. Just imagine the rally part first. How much it rallied? From 8 rupees, 875. Now this is adjusted for bonus, splits, everything till date, right? So don't think it was at 8 rupees 87 paisa. Rather, it was much higher at that point. Went up to 216 rupees almost. That is crazy returns. And just imagine the number of days or years. This was November 98. This is March 2000. Just imagine the number of days or months, right? And how many times from 8x, that is more than 25x in just 1.5 years kind of thing. Okay, now we have seen the best part. Now see the worst part of this. You can see it right now, but you don't know the value, right? So let me show you from 215.8, that is 216, it fell to 33 rupees, guys. That is almost like you can say 87% fall. So the stocks which were favorites, which were like, darling of the market, which went up like crazy, just 1 month, just see this, from 70 to 114, that is 50% returns in single month. This month itself, the correction, look at this, from the peak to the bottom, from 215 to 139, that is like 70 rupees shaved off, right? 75 rupees. That is how many percent? Think about it, 35% shaved off in single month. And this is a monthly chart, guys. Now let me show you Wipro, because very few stocks have survived from that era. This is your Wipro chart. Look at this. Wipro was at 12 rupees, went all the way to 367, 300x. Sorry, 30x, right? 30x. And do you know what was the fall like? What was the value? From 360 to 28, that is more than 90%, 92% or 91% approximately. So can you afford this kind of fall? And markets are very brutal when they do this, right? And this was tech boom. Right now, they're all at their lifetime highs and peaks. See this. It took how many years for Wipro to come back to its peak? 2000, it came in 2021. Can you imagine? It took 21 years for Wipro to come back to its lifetime highs, and this is all adjusted for bonuses and splits and everything. Same for Infi. If you see, Infi went up much earlier, but still, look at this. This was the how many years? will you have that kind of patience? Will you know whether this stock will be so good, will become so big? No, nobody knows. Okay, but see this. It took how many years? Around 6 years, and then again crashed and made a lifetime high. So it's not easy journey. It's not simple journey. If you see Sensex moved down 50%, this stock fell more than 90, 85% kind of thing. So will you be able to hold with this kind of, means after seeing such a huge price on your portfolio, on your stocks? So rather, you should understand, get out at the right time if possible, reinvest, and maybe look at fundamentals also. So basically, that's what I would suggest to people who are absolutely raw in the market or who are even experts. If you are following single form of system to invest in market, it's not easy, right? I will show you even like there are not many stocks that actually survived from this whole thing. I can maybe right now remember Infosys, Wipro, Z. Okay, and then you had maybe HCL Tech IPO had come at that time. Now look at this, from 2 rupees 70 paisa, Z is also adjusted for splits and whatever, 475. Just imagine the amount of capital that was, means the profits that were generated and the fall that happened from 270, 470, sorry, it went all the way down up to 17 rupees. That is more than 95%, guys. And then it took how many years for it to cross? This happened in 15, 16, and now still it is trading below. Maybe it has a beautiful future, but you have to understand the past will tell you what is in store and what can happen. Now here, if you would have put a simple trend line, you would have protected yourself. Here it was very difficult at this point because this was a ballistic move. It was a hockey move, right? Hockey stick move. This was a J. So J usually is very difficult to exit, but you can safely say 25-30% drop from the peak is first sign of maybe getting out of the stock. I'll show you HCL Tech also. It was just, it had come out with an IPO. So this was in 2000. So seriously, if you see, the IPO had just happened in January. Okay, and then the fall happened next month later. So in March it started. So within 2 months also, if you see, this went up from 71 rupees all the way to 188 rupees. Okay, so and then it cracked all the way to from 188 rupees to 13 rupees. Now calculate the means it was much below 90%. So you see this, then it took how many years for this stock to reverse from this point? Almost 14 years, guys, before it could go up, right? So it's not going to be simple if you are in the wrong stocks, in the wrong sector. The heroes of previous sector will never be part of the major, they cannot be the next heroes. So they will take time, they need to survive. And there were hundreds and hundreds of companies which had come out with IPOs. Many got merged, many got, most of them closed, not many, very few got merged, rather, Geometric Software and a few other names. But most of them closed. Now there was Satyam also, if you remember. Satyam was there at that point, and there was K10 stocks, Aftec, Infosys, and all that. So there were many stocks. Maybe let me see if I can bring HFCL for you. Yeah, look at this chart for you. From 19 rupees, 2,552, guys. This is not being adjusted for bonuses or split because this is actual prices. This stock actually fell like this, and within 2 months, I'll show you this part. When I zoom this up, you will realize how it fell, how brutal it was. From 2,552, it made a low of 1,554. That is 1,000 points gone, 40% gone in a single month. Next month, it sees another major brutal fall, right? From 2,554, 1,600 rupees gone. That is more than, I think, how much, 40% or much higher, right? So it was crazy kind of fall for a stock, right? So seriously, I would say it's better to exit when you have the opportunity, right? Right now, the stock is yet to go anywhere. It is still languishing. Not many stocks, as I told you, I can remember from my memory. Very few have survived, and these are the 4 few I remember out of hundreds of IPOs that had come, hit the market in year 1999, 2000 towards means they were talking about IPO, or sorry, they were talking about tech boom and all that. So multitudes of companies have vanished. Okay, so it's very important that you protect your capital. Just to, I would say one simple Wipro can give you, or one simple Infosys can generate fantastic returns. I will tell you what you can lose. Let's say you invested very smartly, your 100 rupees, you have 100 rupees, your capital. You invested in 10 companies. Okay, and those 10 companies, you said, I don't need this money. I invest that 100 rupees in 10 different companies and forget about them. Absolutely. I don't want to look at that money. I don't need that money. It is surplus for me, and you put it there, right? Maybe 10 out of those 10 companies, 9 go defunct, 9 stop trading, get delisted, and you have one Infosys, one Wipro, or one HCL Tech, or one even means bought at maybe whatever the 10 rupees, and you had seen bonuses or whatever. Uh, you would see that your capital grows. Means your 100 rupees, you have put 10 rupees in one stock, and that stock goes maybe 100x. So you would have 1000 rupees now, right? Though you lost 90 rupees on other 9 stocks, absolutely gone to zero, nil, zilch. They are not listed, but still you would be happy. So stock market is a beautiful place to make money, right? But one thing, what you put in market is what you don't need. If you need money from market, then be active in the market, right? And like I say, trade what you can lose and invest what you don't need. I hope you remember this. Trade what you can lose, okay, what you can afford to lose rather, and invest what you don't need. If you go by this ethos, you can never be wrong in the market. And I do I must have not said much about my training programs, but this is what we learn in our training programs: how to protect your capital, how to do portfolio structuring, how to do investments over a long period of time, and how to what to look at, right? And what there are multiple ways to look at charts. I have taught people who are part of your this panel list. Many of them are in the panel list as a speaker. So many of them have learned under me, have been mentored by me. So it's an honor to be part of this kind of market, to be amongst you, to be able to talk to you and maybe guide you. And it has been a happy journey for me. So now I leave it to you. If you have any questions and answers I will give. If you have any questions, or even if you have answers, I would be ready to listen to them also. It's not one way, it can be two ways. So yes, Ashok, I give it up to you now. I hope the presentation was people enjoyed it, and people must have got some great ideas what to do with their money.
Okay, Fidel sir, can you hear me?
Yeah, I can hear you.
Awesome. Should we proceed to the next level?
Yeah, absolutely. Now it's up to you. Just shoot the questions from our participants, and if I can answer, I would be happy to.
Awesome, sir. Thank you very much. So please move on to the next slide, sir. So friends, before we kick off these questions, a quick 10 minutes break for advertisements. Sir, next slide, please. Okay. Sir, can you please run the video?
Sure.
Meanwhile, Sachin, are you ready?
Yes, Ashwin. Now, to explain the whole pairing profit, because that is the core of this presentation, I would request our good friend Chandresh, who is going to explain to you like a teacher on how this pairing profit works. Chandru, May I welcome you to the webinar and take it over from here, please. Thank you.
Yeah, thank you so much, Kalyan. Hello everyone, welcome to this webinar. I am your product head. So whenever you have doubt related to any of the product feature, you can follow me, you can write me. So today we will learn with a few examples how pay when you profit exactly going to work. हम आज सीखते हैं पे वेन्यू प्रॉफिट एग्जैक्टली काम कैसे करेगा, कैसे वर्क करते हैं, फ्यू एग्जांपल, ताकि हमारे सारे डाउट पे वेन्यू प्रॉफिट रिलेटेड क्लियर हो जाए, ठीक है ना। सो कैन वी गो टू द नेक्स्ट स्लाइड प्लीज। ओके, तो यहाँ पे फर्स्ट एग्जांपल बहुत ही सिंपल एग्जांपल लिया हुआ है। आपने एक चीज बाय किया हुआ है, आपने सेल किया, सेल करते टाइम आपको लॉस हो गई, तो आपको आपने जो स्क्वायर ऑफ पोजीशन है, आपका जो स्क्वायर ऑफ ऑर्डर है, वहां पे आपको ब्रोकरेज नहीं देना होगा। ये सिंपल पे वेन्यू प्रॉफिट का लॉजिक है। इंट्राडे में जब भी आप स्क्वायर ऑफ करोगे और आपको वो पोजीशन पे लॉस हो रही है, तो आपको ब्रोकरेज नहीं देना है, ठीक है ना। अब इसका ब्यूटी ये है कि फ्यूचर में भी काम करेगा, ऑप्शन में भी करेगा, कमोडिटी में भी करेगा, इक्विटी में भी करेगा, अक्रॉस ऑल प्रोडक्ट टाइप में करेगा, है ना। तो ये बहुत ही ब्यूटीफुली डिजाइन किया गया हुआ है। बट ये तो जो एग्जांपल आपको दिख रहा है इज नॉर्मली बाय एंड सेल का है, बट क्या रियल लाइफ में एक्चुअल ट्रेडर से बाय सेल ही करते हैं? नहीं, ट्रेडर और भी तरीके से ट्रेडिंग करता है, करेक्ट। तो हम लोग नेक्स्ट स्लाइड में देखते हैं कि और एक कॉम्प्लेक्स एग्जांपल लेते हैं, बाय सेल के अलावा किस तरह से हम लोग पे वेन्यू प्रॉफिट का फायदा उठा सकते हैं, हाउ वी कैन टेक द एडवांटेज ऑफ पे वेन्यू प्रॉफिट। सो फॉर एग्जांपल, इफ यू आर अ ट्रेडर, इफ यू आर अ प्रो ट्रेडर, what you are doing, you are taking position part and आप पूरे दिन में पोजीशन अलग अलग सेपरेट ऑर्डर डाल के आप पोजीशन बिल्ड करते हो। फॉर एग्जांपल, आपने ऑर्डर नंबर 1 में एक शेयर लिया 2098 पे, ऑर्डर नंबर 2 में 2100 पे, 2105 पे, 2100 पे, तो आपने टोटली 4 ऑर्डर बिल्ड किए हैं, ठीक है। आपने कोई भी पोजीशन अभी तक स्क्वायर ऑफ नहीं किए, कोई भी ऑर्डर आपने बेचा नहीं है, ना पार्ट सेलिंग किए। ये एग्जांपल में आपने 4 ऑर्डर एक साथ अलग अलग प्राइस पे खरीदा हुआ है, तो उसका एवरेज प्राइस आ गया 2103, ठीक है ना। अब आप क्या कर रहे हो, आप बेचते टाइम मतलब पोजीशन को स्क्वायर ऑफ करते टाइम ऑर्डर नंबर 5 में आप चारों क्वांटिटी जो आपने अलग अलग ऑर्डर में ली थी, आपने क्लब की और आपने सेल कर दिया, मतलब स्क्वायर ऑफ कर दिया पोजीशन को। अब यहाँ पे सिस्टम क्या करेगा, सिस्टम जो आपने 4 ऑर्डर अलग अलग रेट पे लिए थे, उसका एवरेज प्राइस से आपका 500 ऑर्डर मैच करने की ट्राई करेगा। दैट मीन्स आपको एवरेज प्राइस का यहाँ पे एडवांटेज मिलेगा, और फिफ्थ ऑर्डर जो आपने 4 क्वांटिटी का लिया हुआ है, आपने 2100 मतलब आपने लॉस में बेचा है। दैट मीन्स आपको ऑर्डर नंबर 5 पे कोई ब्रोकरेज नहीं लगेगी। क्यों नहीं लगेगी? क्योंकि एक तो आपने स्क्वायर ऑफ पोजीशन है और आपकी जो पोजीशन थी उसके सामने हमने ये मैप कर दिया है, ठीक है ना। सो एक तो हो गया नॉर्मल बाय सेल जो हमने प्रीवियस स्लाइड में देखा था, और यहाँ पे हमने थोड़ा सा कॉम्प्लेक्स सिनेरियो लिया है। यहाँ पे ऑर्डर बिल्ड करते गए और बाद में आपने एक साथ स्क्वायर ऑफ कर दिया, ठीक है। चलो आइए एग्जांपल नंबर 2 देखते हैं। कैन वी गो टू नेक्स्ट स्लाइड प्लीज। ओके, यहाँ पे ट्रेडर ने वही किया, ऑर्डर नंबर 1 2 3 4 पोजीशन बिल्ड करते गया, जैसे प्राइस ऊपर जा रहे थे तो पोजीशन बिल्ड होते गई। लेकिन सेल करते टाइम यूजर ने क्या किया, पार्ट में बेचा। पहले एग्जांपल में हमने देखा था कि वहां पे एक साथ सब बेच दिया था, लेकिन ट्रेडर ऐसे नहीं करते, राइट। ट्रेडर पोजीशन बिल्ड करने के बाद पार्ट में स्क्वायर ऑफ करेंगे। तो आपने ऑर्डर नंबर 5 भी बेचा, ऑर्डर नंबर 6 भी बेचा। यहाँ पे भी सिस्टम ने क्या किया, आपने जो 1 2 3 4 ऑर्डर स्क्वायर ऑफ करने से पहले जो ऑर्डर थे उसका एवरेज प्राइस लिया, और ऑर्डर नंबर 5 और ऑर्डर नंबर 6 से वो एवरेज प्राइस को मैच किया। अब यहाँ पे ऑर्डर नंबर 5 और ऑर्डर नंबर 6 दोनों में आपको लॉस हो गई है। दैट मीन्स यहाँ पे भी आपको ब्रोकरेज नहीं लगेगा। ये 5 ऑर्डर नंबर 5 और ऑर्डर नंबर 6 एब्सोल्युटली फ्री हो जाएंगे। सो हमने ज्यादा से ज्यादा ट्रेडर का एडवांटेज और ट्रेडिंग पैटर्न्स के हिसाब से पे वेन्यू प्रॉफिट डिजाइन किया गया है। ओके, सो आप एक बार इसको एक्सपीरियंस करेंगे तब आपको पता चलेगा कितना स्मार्टली और यूनिकली डिजाइन किया हुआ प्रोडक्ट है, ठीक है ना। अब हम लोग जाते हैं एग्जांपल नंबर 3 जो थोड़ा सा और कॉम्प्लेक्स है। ओके, सो यहाँ पे क्या किया, यहाँ पे मान लो आप फ्यूचर ट्रेडर हो, आपने पोजीशन 1 2 3 4 ली, अलग अलग रेट पे प्राइस आपके डायरेक्शन में जा रहा था पोजीशन लेने के बाद। अब सेल करते टाइम आपको सिग्नल मिल गया यहाँ पे मुझे बेचना है, तो आपने क्या किया, आपने स्क्वायर ऑफ के साथ वही ऑर्डर में आपने क्वांटिटी बढ़ा के नई पोजीशन भी क्रिएट करने की ट्राई की। सो मैंने 4 क्वांटिटी ली थी ऑर्डर नंबर 1 2 3 4 में। ऑर्डर नंबर 5 में आप देखिए आप सेल करते टाइम 5 क्वांटिटी बेच रहे हैं। दैट मीन्स यू आर सेलिंग मोर क्वांटिटी। तो मैं सिस्टम ये ऑर्डर नंबर 5 को एज्यूम करेगी ये न्यू पोजीशन भी है और स्क्वायर ऑफ पोजीशन भी है। तो यहाँ पे आपको ध्यान रखना है, ऐसे केस में आपको प्रॉफिट हो या लॉस हो, आपको यहाँ पे ब्रोकरेज देना पड़ेगा। क्यों देना पड़ेगा? बिकॉज अकॉर्डिंग टू सिस्टम यहाँ पे नई पोजीशन भी क्रिएट की गई है। स्क्वायर ऑफ प्लस न्यू पोजीशन जब भी आप क्रिएट करोगे एक ही ऑर्डर में, तब वो ऑर्डर पे आपको ब्रोकरेज देना पड़ेगा।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Thank you very much, sir. Can you jump to the slides, please? Okay,
Yeah.
Sachin. Over to
Yes.
you, Sachin. Sir, next slide, please. Thank you.
Yeah. So, hello everyone. This is Sachin Zavade from Espresso Product Team. Espresso is a discount broking company where we have a unique offer which is pay when you profit, specially designed for intraday traders. And as you have seen the video, you can check more details on our website, which is www.myespresso.com. In Espresso, we offer all three channels, such as like mobile, website, and the desktop. It is specially designed for all kind of traders and investors. We try to give you a best-in-class experience, real-time data feeds, and the market scan. And there are other many more tools which will help you out for your trading and as well as for your investment purpose. So we have created demo watch list for all our channels, which is available on YouTube. Our YouTube channel name is Espresso Invest. So kindly go and have a look. Next slide, please. Next slide, please. Next slide, please. Yes. So this is our website, which is trade.myespresso.com, especially for the trading. Here you will see for the charting purpose, we have integrated with TradingView Pro, okay, where you can place orders and as well as manage your position from chart itself. So we have added depth of market trading also, where just clicking on depth of market, you can place orders and you can square up also. And here also you enjoy paid, where TradingView take a subscription fees from others, but we have added in our channel, which is totally available for your free. So there are few advanced indicators such as like a volume profile, then the ratio chart, and the spread calculation. Definitely, it is totally free for our all customers. You can do buy sell from chart, and it is totally time saving for you, because why we have introduced a auto save layout. So whatever you do action within a 2 second, it get automatically saved. So when you come back again the next day, you will see all those indicators, all those tools, all your favorite scripts on your chart. With this trading view, we have added a chart book functionality. It is a one of kind only available with Espresso. So in the image or on the top, you see a list of scripts. So these are all your recent 15 scripts which you have open analysis open for your analysis in a chart. So we track all those. We call this as a chart book, and one by one you can see all those things. And here you will see left hand side watch list, market and indices, and right hand side you will see the charts. So this is a total complete analysis tool for you. Next slide, please. So by doing small things, we want to help our traders and as well as investors. So we have a zero brokerage on square of orders. Then we don't charge you for delivery orders. Whenever our system square off MIS orders for you, we will not charge you. Then we have a deep out the money trading option. So you will not face any difficulties for trading in options. Then we have a split order. So for example, there is a limit from exchange when you are trading with particular contract. So for that you have to place multiple orders. But in our system, you can place whatever the quantity you want to place, and our system will slice it down with the multiple orders. Then we also support intraday trading. For those, we have added around 350 plus scripts in our MIS orders, where you can use leverage. Then you can place bracket order for Nifty and Bank Nifty, and there is a AIM order also available. And for the investors, we have a pre-apply IPO. So before uh, IPO open, you can place order for that particular IPO. So thank you so much. I would request you go and check our website, which is myespresso.com. Over to you.
Thank you very much, Sachin. Friends, here is a quick update on StratosOn, the Amazon fund of trading strategies, a company involved in building 100% algo strategies for retail traders. If you are a working professional looking for a sustainable algorithm which can help you to earn respectable returns over the long period of time with the power of compounding, StratosOn is the right place for you. For more details, log into www.stratoson.in. Next slide, sir. Okay, the vision of StratosOn is to help you double your capital in a span of 3 to 4 years, and and a target of 26% per year compounding, so as to make 10x in 10 years. That is a vision. The minimum ticket size is 25 lakhs. There are about 8 strategies, out of which the Chanakya integrated strategy is one of the most robust and successful strategy which has already gone live. Next slide, please. Okay, out of 63 months of validation, the model made money in 53 months and lost money in roughly about 10 months. That means more than 85% of the months it made money. On a quarterly basis, it made money in almost 19% of the quarters. That's about 90% of the time. But on an annual basis, the strategy made money 100% of the time. Okay, which means longer the term, higher is the probability of profits. That's the bottom line. Next slide, please. Okay, that's the yearly performance of the strategy over the last uh, 5 to 6 years, and last quarter model already made about 8.72%. This quarter particularly, last month the strategy made about 4% something, and this month the strategy is sitting at around a profit of around 2%. Okay, effectively this quarter is already 6%. So technically 8 plus 16, 8 plus 6, so around 14 to 15% is the income this 2.0 strategy that could have earned in the last 2 quarters. That's in a nutshell. Still we have 2 more quarters to go. Let's see how the strategy would work. Next slide, please. Okay, friends, here is my special invitation for the Traders Conclave 2022, the largest retail stock traders residential conclave that has ever happened in Bengaluru. Okay, it is a 3 days program with 8 very powerful speakers spread across various topics with 8 sessions, a lot of competition, quiz, prizes, and awards and accolades. All right, next slide, please. Friends, an event of this scale would definitely generally cost, most of the companies charge about 45 to 75,000, but we have kept the price extremely low so that there is extensive retail participation. At the same time, there is tremendous value generation. So that is why we have handpicked some of the speakers who helps you to learn various strategies, not just one concept or one idea. They help you to learn a monthly positional strategy, weekly positional strategy, an investing strategy, an expiry day strategy, algo trading strategy, a quant strategy, say for example intraday strategy, and so on. Okay, and speakers have their own achievements. We are bringing a 200 crores quant fund manager, a GAN practitioner, an Elliott wave expert, $1 million fund manager, a very powerful positional weekly writer, and finally an expert in straddles who consistently plays about 100 lots. This is the kind of speakers we have arranged for you. Next slide, please. As I've already repeated, an event of this scale costs about 50,000 to 75, but I have kept the price at a most democratic level. The hotel itself is going to be roughly about 20,000 for the stay, as well as 8 meals for the next 3 days, plus VIP arrangements for the conference, bringing the best in class speakers from different parts of the country. However, even that money is almost repaid to you in the form of brokerage credits, as mentioned in item number 3, which officially means this program is free for you. Okay, so come over, book your tickets, block your schedule, bring your families, bring your children. Okay, if you bring your family, your children can stay for free. Okay, we have made such an arrangements. There'll be a lot of goodies, mementos, gifts over and above the most valuable learning and the sweetest memories that we would get. Okay, all this benefit packaged into a amazing pricing model in the next slide, please. Okay, we have kept the price at 24,999, though the MRP is 34,999. So we have another 20 seats to be filled. And the moment it is filled, we will raise the bar and the dynamic pricing would apply. Contact the conclave manager on the number given, Mr. Fazil, or you can buzz him in Telegram on the ID Traders Conclave. He will give you all the answers and supports. Go ahead, book your seats. See you in September. Do not miss this interesting program, and we are doing it for the very first time, and definitely we are going to bring a lot of surprises into this program. Next slide, sir. All right, sounds good. Here comes the 5th quiz of the series of Super 25. The question is, Sensex was launched in the year. Go ahead, friends, shoot your answers. Fastest fingers first. I repeat the question. Sensex was launched in the year. The next slide. Okay, the winner will daily we select one winner, as you all know. So for the next 25 days, there will be 25 winners. These guys will get free access to Option Omega and Intrazen events for the 2022 with lifetime recording access. And we are going to select one man who is going to be the man of the Super 25 series. He will win educational goodies worth rupees 1 lakh from Traders Gurukul. Okay, go ahead, try your luck. And next slide. Here is the 4th answer of the series. Where is the Chico span of 25 days ahead of now? Which means, what is Chico? Chico span is the price, current price moved 26 days back. So Chico span of 26 days ahead, if you move it 26 days back, it will come to today. The answer is today or now. Almost 300 people answered the question right. However, fastest finger first, the winner of this competition is Mr. Aero Shankar. We could not reach out to him for his photo. Mr. Aero Shankar, you know whom you are. We will reach out to you shortly, and you can have the access to the 2 conferences which are coming up this year. Thank you very much. Over to the next slide, sir. Okay, now it is time for questions. Now, friends, I hope you had a fantastic session with Fiday sir. That session, the whole session comes with almost 26 years of experience. Remember that. I think many of you will not be even 26 years old if you check the stats of the ages of people.
Ashok, it is 32.
Okay. I am damn sure 50% of the crowd here are less than 32 years, Sirji.
You are discounting my few years. Initial years in the market.
Sir, that also makes you younger, right?
Yeah. Happy to be more younger now.
I hope you had a great Eid.
Yeah. Usually Eid is with family and friends only. So this time we had friends. Last 2 years there were no friends.
Superb. So great, friends. Go ahead. Please shoot your answers. Meanwhile, shoot your questions also. I think, sir, this quiz should come in the beginning of the session, because most of the times people will be very busy answering. They will not shoot questions.
Yeah, they want the goodies.
It's always good to win competition, sir.
Yeah.
It
हमारे लिए
brings
भी
a
कुछ
lot of.
रखो. You keep some competition for us also. Some goodies for us also.
Sir, what competition for a mentor, sir? Very nice.
You said people love to win competition. So I said I also love.
Okay. Next question is this.
Yeah, tell me.
The question is from Mr. Pradeep Porwal. Sir, at what level investment can be done in present market condition?
As we discussed, I had shown also okay, when you see a drop of almost 25% in the market from the peak, right? 25%, you start investing in a SIP manner. Select your stocks, whichever you want. Means you can select 5 to 10 stocks where you would like to put your money. Maybe those can be index heavyweights also. And you can see most of the stocks will be available at very cheap valuation after a drop of 25-30% from the peak of the index, right? So just simple, now we know what is the peak of the market, 18,800. So just subtract 25% of that, and we saw that I had told you 13,500 approximately. So you can start investing around 14,000, 14,500 in that zone, and you can start deploying your capital weekly instead of monthly. So what happens is when there is a major corrections in those last few weeks, you are buying at very good valuations, right? You are not deploying money over a period of maybe you can do SIP of, let's say you have 100 rupees, so split it into 6 parts or maximum, that is 5 to 6 parts, and invest in next 5 to 6 weeks. That should be good enough. If you are a little uncomfortable, put it fortnightly, because it's very difficult to invest money when markets are at falling, and there is all negative news, gloom around you. So people feel, if I invest now, that I will lose money. So I have already shown that after a major fall of 40, 50, 60%, what we have seen, the next two falls will always be around 25 to 30%. They will not be very deep. Okay, so that's the beauty of, means when you know the statistics, when you know the charts, when you see the charts in proper way, you understand, like, it's very simple when to put your money, when to exit out of market. So right now, I would say first thing you should worry about is when to exit the market, which I already shown from the chart also, right? If you want, we can just open the chart again, maybe for your benefit, and show you, right? I had shown a specific presentation. So look at this. I had shown you whenever you see Sensex go below 51,800 or 51,500, that is the time to get out of the market and maybe buy when it is 25% from this point. So that is 62,000. So approximately 15,000 below. So that is around 47 or a little below, right? You can safely assume around 45,000, or you can put exactly 25, calculate kar lijiye, just this number 62,245 minus 25% of that, wherever it shows, you can start deploying your capital. I hope I have answered your question, Pradeep.
Sounds good, sir. Next question by Mr. Vishnu Parupati. Could you please
Okay.
explain one more time the exit strategy, whether 20 or 30 fall is the best strategy, or the quarterly EMA?
No. The exit strategy is this one, the chart that I have made, which is 2 monthly chart or bi-monthly chart. The candles are made for every 40 days, right? Approximately. So you should use 40 days as a custom candle and put 8 EMA, 8 EMA, that is for this data, right? For this candles. So you put that on the chart, and you see whenever the price closes below, the index closes below that moving average, that is the time you need to start exiting the market. That's the best time to protect your capital. Till it is above that, you can stay. If it goes below, get out. So here in this case, we have already seen the value of the moving average was something like 54,155. So if you see index stay below 54,155 for this candle, right? So if this candle or next candle, whenever it happens, if it closes below 54,155, that is the time to remember. But this is a very dynamic moving average. This will keep on changing with price. If the price goes up, it will go up. So you need to be very careful when you use this kind of moving averages. Because right now what I'm showing the value will change as and when the price and the time passes, right? The more the time passes, the moving average value will change. The more the price changes, the moving average value will change. And that's the reason I have given you a specific chart to use and specific moving average to use. Okay, so this should be a specific exit strategy. Are we good with the answer?
Yes, sir. So next question by Mr. 𝐃𝐞𝐜𝐳. Sir, you mentioned there are 2-3 minor dips in between two major falls. If I have
Right.
capital, should I enter in minor dips or wait for that one major fall?
Well, I would say, like, see, if you invest at that minor dip, that is not seriously a minor dip. 25-30% fall on index actually shaves off almost 50% of your capital or the portfolio. So don't think of it as a minor dip. This is there are three types of fall actually in the market. One is a minor, which doesn't go below this moving average, right? If you see this, there have been corrections within this, but they have not gone below the moving average. But once they go, then you would see something like 25 or 50% kind of correction. So if you see 25% kind of correction, that happens after a major correction. So we have had a major correction just now, right, in 2020. So the next correction, whichever is going to happen, maybe it may happen in few days to few months to few quarters, right, maximum. So whenever it happens within next few quarters, I would say you should first exit, and then when you have the money, you should deploy and re-enter your stocks which you have sold at higher level. Maybe if you like them, and you can buy them cheaper, right? And maybe you can bulk up more, you can buy more quantity from whatever you sold also, and plus add additional capital, and that could give you fantastic returns. So my suggestion would be, first thing, don't assume 25% correction to be a small correction, because that will shave off 50% approximately of your portfolio minimum, right? If your portfolio is made up of last stars or heroes of the previous rally, then you may see a major shave off. So that is also a big issue for holding stocks forever, right? So don't hold stocks forever unless you don't need that money forever, right? So yes, it's a good strategy to, as a technical analyst, I would say. Plus, if you combine fundamentals, this we are talking about Sensex and Nifty. So we are looking at only the top businesses of the country, right? We are looking at best 30 and best 50 businesses of the country. So I would suggest, like, if you ask me question like which stock should we invest, I would say don't invest in PSUs unless there is a clear-cut government strategy of divesting. Even if they divest one of the companies, listed companies, that would be the first indication where you would see the government is serious about it, because PSUs don't seriously. I am not very comfortable investing in PSUs. But other than that, if you look at simplest thing to do is buy consumer companies or consumer related business. So telecom would be a good sector to watch out for. Then retail would be a fantastic sector. FMCG would be fantastic. Banking should be bought only in case of interest rate cycles. Don't buy bankings otherwise. So banks, if they are cheaper, if they are available at so why I avoid banks is banks have this they deal in finance, cash, right? And most of the frauds that you have seen, the major issues that have cropped up ever in any market across the globe, those are mostly related to financial scams, right? So most of the crash happens because of financial scams. So you don't know which bank will be the next one on the hit list, right? So probably all banks are like prone to frauds, and these are not something that people in the bank want to do it. It's like people who work in the bank, they become greedy, or they become over complacent with their risk management and all, and that's where the problem happens. So if you see, banks and NBFCs are major places where the money flows continuously and the chances of the frauds are very high. So if you are putting your money for very long term, the simplest thing to do is buy something that you need on day-to-day basis, roti kapda makan, right, and bijli pani or data. So invest in those companies which you need on day-to-day basis. So find sectors which are good, right, and which you need, and within those sectors find the leaders. Because when you're buying on such dips, don't buy the laggards or don't buy the second rung stock, buy the leader, because you are getting it at a deep discount. Okay, I hope this helps.
Sounds good, sir. Let me move on with the next question. This is a question by Indragni. Why don't we see normal retail traders being filthy rich these days like the earlier Junjunwalas and Daman? So they invested when it all started. Means the newer generation are at a disadvantage. Very, very interesting question. Sir, did you understand
Actually,
the question?
yeah, I did understand the question. It is kind of sarcasm plus it is kind of reality.
Yeah.
Reality, why people don't see, you want to be wealthy, you want to become like Warren Buffett. Even at this age, Warren Buffett is thinking long term. Okay, he's not thinking short term. So like Rakesh Jhunjhunwala, they were people at right place, right time, and they took the risk. Now people say you should have invested 10,000 rupees in Wipro in 1986 or 87 when it came out with an IPO. I'll tell you, the real fact is it is easier said than done, because in 1986, if I remember well, I was 16-year-old. I had just completed my SSC. My father's salary was 800 rupees, being a manager in a firm. Do you think he can afford to invest 10,000 rupees? Okay, so that is one thing. Second thing is, even my salary when I started working in bank as a probation, in a probation, it was 800 rupees to begin with, and I'm talking about year 1990. Okay, when I started working in a bank when I was 20. Okay, my first salary on being confirmed was 3,500. Now, do you think people can? And I got married by 22. So just imagine, I have a family to worry about, and I have means. Do you think people would invest? But luckily, I started investing. But I come from a very humble background. My father never had a home for himself. So right now we live in a home which is our own. All of us, like all siblings, like we at least have one home over our head. So from having nothing, from having sold footwear on streets in Mumbai to being here is again a good part of your journey, right? So don't compare your journey with other people. Don't compare others, means maybe wealth to yourself. You are, seriously putting yourself in the life full of misery if you do that. Rather work on what you want to do, be happy with what you have, and try to work around it. Try to make sure that you save more. And Rakesh Jhunjhunwala became filthy rich in last few years. He was filthy rich when he started also because he had good capital to start. Okay, so not everybody is blessed with that kind of capital to start. So if you have, fantastic, be happy, be in gratitude, and maybe invest your money in a right way, in the right stocks. And as I told you, invest what you don't need and trade what you can afford to lose. So if you remember these two, means sentences, seriously, you are in for a very good journey. but you need to be very clear about what you want to achieve. And long term means to survive for long term and to live for long term. So nobody makes money in short term. If you make money in short term, it is purely either through trading, which you need to be very good at, okay, and then you need to have good capital to start with to make big money. If you had 1 lakh rupees and you started trading with 1 lakh rupees, even if you make 10 lakhs, you are not going to be filthy rich, right? So it all depends, but over a period of time, your 1 lakh, if you can make 10 lakh in 2 years or 3 years by doing whatever you do is in trading, and if you are good enough, then you can multiply it in next 5-10 years to 1 crore rupees. So start, at least start. You know, a journey of a lifetime begins with a single step. So start taking those baby steps in the right direction rather than thinking about other people. Think about your journey and how you want to take it further from there. I hope I have been helpful to you in your whatever the question you asked, because it was a very general question, but I tried to answer in a way that you can take advantage of it.
Sounds good. Sir, a question by Vikas Singh. Can you please give entry and exit rules for individual stocks?
No, because individual stocks have individual systems. Every stock has its own way of behavior. So it's not easy, and you need to actually practice. You need to see the chart. It's like I'll tell you one simple example. I'll give you an analogy. I know Naresh Mirani since he was born. Okay, so if he asks money from me or I ask money from him, we would be comfortable giving maybe 1 lakh, 10 lakh, 50 lakh rupees to each other. But today, Vikas Singh, you are meeting me first time or listening to me first time. If I ask you 50,000 rupees, will you give me? First meeting, if I ask you 50,000, no, right? Because it's not easy, it's not simple. You don't know me, you don't have a relationship with me. Same way, create a relationship with the chart. Look at the stock. Try to understand what it is telling. Like put the basic indicator like moving average, which is my forte. So that will tell you, like in this chart, if you put a moving average, now this moving average, this whole system I have devised in, just for this session, how to take an exit. Like I have other systems also, but I wanted to give you guys a simple system to work on. So, every stock will have a different system, and every chart will tell you a different story. Reason being, understand one simple thing. I don't know whether we guys take this in a very positive way, but it is very simple. There is a market maker, and it is a very, very simple term when I say market maker. But when I give you the exact term that we use as a market participants, we call them operators. Now, when you look at operators, you feel negative about them, right? But when I say market maker, it looks like a bahut acha naam hai. It's a good name. Now, these guys are humans. They have their own ways of operating a stock or making a stock, right? So they function in a different way, and they have their own rules. And I'll tell you one simple thing: these rules are not set by any books or anything. Like if I read technical analysis books, does it mean I will be a successful technical analyst? No, because market makers don't have any rule book. They create their own rules. So you need to observe first. You need to make that relationship. The example that I gave you of Naresh Mirani is because he's my bhanja, right? So I can give that example. Same way, you have to create that relationship with the stock. Look at the chart for some days, few days. Understand what it tells you. Look at the chart from long-term perspective. Most of the time, what I see people is they look at charts here. This is what they are focusing on. And see what they miss is this. So you haven't created a relationship with the stock, which is in existence in 79. So you cannot afford to put 50,000 rupees over there, right? You don't know me, so you cannot put 50,000 in my hand and say, okay, sir, take, enjoy, right? So that is very important. So there is no clear-cut exit strategy. One exit strategy, as I said, in case of when I showed you Y2K stocks, right? Year 2000 stocks, especially HFCL, when I said that. 25-30% is a thumb rule. Probably if a stock falls 30% from the peak with huge volumes in a very shorter time, it is a time to exit. There is another rule which I teach in my program. I say 8 to 10% fall. Now, please understand, I'm going to be very specific. So don't quote me in a different way, because this is, me and my community knows this exactly the way I'm speaking, and you should remember what I've said. Otherwise, you will be out of many good stocks from what I'm saying. 8 to 10% fall with 8 to 10x volumes. I'm repeating, 8 to 10% fall with 8 to 10x volume, even if you see that kind of volume in intraday. Now, the second part, first part is the percentage fall and the volume part. 8 to 10%, 8 to 10x times volumes, average volume. Now, average volume should be at least, take 40-60 days kind of average volume, right? And the next part comes, which is most important, is of a stock which is highly traded, widely held. If you don't understand this, seriously, you need to learn. So highly traded, widely held stocks, if there is a fall of 8 to 10% with 8 to 10x volumes, you should exit that stock. And I'm talking about intraday. I'm not even saying over a period of time. So even if that happens during the day, like I can give you example, I can show you one example, at least one example. Okay. Let me show you one example at least. Not many people know this company by the name, they know it by this current name. They don't know it by older name. This company, how many people know this company's older name? You can even ask a quiz competition here. Okay, so look at this. This stock went up like crazy, and this is where the fall happened first time, right? I'll show you. We'll put the volumes also here. The problem is this is a daily, monthly chart. Let me make it daily chart and blow up the whole thing for you, because that will give you a better kind of indication. Don't worry about what numbers I put, because that is simpler way for me to use it. Now see this fall happened, right? This one here. I'll blow it up for you, and I'll tell you the name of this company also. I don't know whether you guys have heard about Financial Technologies. This company's earlier name was Financial Technologies. If you know NSE scam that happened in commodities and all that. So this company was supposed to be, they are undergoing a case, and maybe some amount has been frozen by the Supreme Court and all. But they won some case against them. But look at this now. Look at the size of the magnitude of the fall. This was one of the highly traded, widely held stocks. This is one single day correction. Look at the volumes for your information. This was normally 35,000. Then there was a little spike in volume, a little fall here, which is very normal. But look at this volume. It was 62,54,000 shares traded on this day, and the correction was from 487 to 180. That is 300 rupees shaved off, almost 60% shaved off, 55%.
Sounds good. Sir, are you there? Pillai sir? Pillai sir, can you hear me? Friends, can you give me a check if you can hear me? Ashok this side. People on GoToWebinar as well as broadcast. Okay, sounds good. Thank you. Pillai sir, are you able to hear me? Okay, Pillai sir, one more check for you. I'm able to see your screen, but I'm not able to hear your voice. Okay. Pillai sir, one more final check. Okay, no worries. I will try to conclude the show. Maybe I can talk to Pillai sir later with the final check.
Now apply the rule 8 to 10% with 8x to 10x here. It was 80,000. It was in was now 82 lakhs on this chain. There are multiple rules. The who is holding a stock capital protected. So this okay. So 30 rupees. It went to 1 until date stock. It runs. It has exchanges based. So they manage exchanges. So but think about the year after that. So I hope this multiple bucksy attention at one multiple. Yeah, I hope this answers. Okay.
Yes, sir. Perfect. In fact, your voice was dropping. That was one problem. No worries. Can you move to the last slide?
Oh, yeah.
All right. Sounds good. So, Pillai sir,
So
with
that's
this,
me, guys. You can follow me on Twitter.
Yep.
Okay.
We come to the end of the session successfully.
Yeah.
Thanks for your detailed and insightful session. I am getting a lot of
Right.
positive comments. On behalf of the participants of Super 25 edition 3.0, the Money Control Pro team, the Espresso 𝐶𝐈 family, and all the extended family members of Traders Gurukul, we extend our sincere thanks for joining our event and sharing your knowledge with every one of us. Thank you very much, Pillai sir.
Most welcome, honored and happy. Always will be more happier to share my knowledge with the community. So whenever I'm called, I hope I have never said no. So hope to be there again whenever you call me.
Definitely, sir. That's really great. So friends, that's the story for today. I hope every one of you enjoyed the session. I will see you all tomorrow at 8 p.m. sharp with yet another interesting session. By the way, we have successfully completed 20% of Super 25. We have a long journey ahead. We have 80% of sessions pending. See you all tomorrow, friends. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Thank you very much. Bye-bye.